Hi, I'm Liz Lumley from Finextra, and we're here at EBA Day in Berlin, and I'm speaking to Richard Williams of Market Gravity. So we're going to talk about innovation, and it's kind of the conventional wisdom that banks really can't innovate. So do you think that's true?
I do think it's true, and I think there's challenges that face the banking industry, and primarily looking at the retail banking industry. At Market Gravity, we have identified 4 paradoxes which really limit banks' ability to innovate and keep ahead of faster moving startups and peers. Going into them, the first one is looking at the assets that banks have. So assets that traditionally have really built up banks into a dominant position now really risk threatening them and destroying them in the new world. Looking at things like the infrastructure, which used to be very secure and playing to that, now really limits any ability to move quickly and change. Also looking at brand. Banks always had traditionally a very strong brand and a trusted brand, but as we can see sort of in recent years, that's distinctly eroded, and customers no longer trust their banking provider.
Trust is a big issue.
Yeah. Secondly, looking at sort of just the way banks work. And so banks traditionally have always valued security over flexibility and speed. And that's the role they had in society. They were the vault of banks, and they were the vault of information. And going forward, they're increasingly threatened by fast-moving, sort of looser competitors who care less about privacy, care less about security, and more about speed and compelling experiences. The third one is looking at customers. So retail banks are forced to treat everyone the same, regardless of whether or not they're profitable or the ones they really want to target going forward. So you have to readjust who you look for and who you target and how you tailor services to those customer bases.
So you've given us 3 reasons.
Yep.
What can banks do about it?
So going forward, there's a couple of things. So on the last point, looking at the customer base, there's one thing you need to look at is segmentation. So banks have always talked about segmentation, but it was just groups. With the data that's available today, you really have to have a one-to-one relationship with your customer and tailor it specifically to them and what they want. You also have to look at and understand who your most profitable customers are and provide them with loyalty mechanisms to keep them to stay. In terms of the ways of working, banks need to take new product development out of the BAU process. It's too hard to get approval and to work into sort of the normal cycles. And so they need a way of incubating it outside in a rapid way and then feeding that back into the system, similar to the way their competitors are now doing. And lastly, they need to start creating products for future value. And there's a lot of discussion today about mobile and about wallets and how that is going to play out. And banks really need to look at developing the platforms and developing the products around transaction services that keep them present, that keep them front of wallet, yet add value to the customer.